Check, check, quick sound check. Can everybody hear me loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, and at the buzzers,
Yes.
welcome back. Happy
Welcome.
Friday. How was your Friday,
It
Coach?
was it was good. It was good, Coach. We were talking a little bit in the green room. It started off a little rough. Had to have some honest conversations with myself and got on the right side of things. It's been a tough week. I think, like, mentally, I've just not been really checked in. I think we talked earlier in the week. I had some people doing some work in the house and things like that. And it was just a lot going on. Um, And I think I use that as an excuse to not trade well when really what it should be is just not trade at all. But today was a good end to the week. I like the way I ended the week. Going into next week, going to use that momentum. But just a reminder, like, hey, be mentally locked in when you're doing this. It's important, and take care of business, and then get off the screens. How was your day,
Wow,
Coach?
you sound just like a coach there, Coach. Uh, I had a decent day. I recovered from I had it started I also started out poorly. Um, I put some positions on before the number, thinking it was after the number. Uh, Brain fart. But it cost me in the treasuries, but I traded well, went right back into it according to my plan, and eked out a decent day, but was not easy. Um, it's Friday, first day of the month.
It is.
Um, let's ask the audience, how was your day?
How
Let us
was your
know.
day out there in the audience? Let us know. Were you up on the day, down on the day? Did you start the month off well? AB the Don says, same thing happened to me last week. Should have taken a few days off. Turned it around this week though. Nice. Yeah, it's important, man. It happens to all of us. We're all susceptible to it, right? If you're not locked in and if there's distractions and things like that, it can affect anyone as a trader, right? Because you are you want to make sure that you're in a place where you're making sound decisions and I don't care how much money you make, you or have, you need to make sound decisions about that money or it's not going to be yours, especially in these markets. But let's see what we got in the chat. We have day trading is real says great, up over 1K in practice mode today. Nice. Up 1.2K in my combine and 6% in my options account. Linus Rain says mixed, started red in one account, ended green in another two. Uh, GW Green up 1998 for the week. Past three
Nice.
combines, 2,502 XFAs, 3K in payouts for AB the Don. That's a great way to end it. Great way to end the
Congratulations.
week. Um, and shout out to Andrew. Shout out to Andrew, our moderator. You see him in the chat all the time. He's the one that's sending over all of your questions to us. Sent us in our Discord chat. Nice way to roll into the weekend, passing 150K combine with a $2,000 day today. So shout out to Andrew. Congrats again on that. Trade well in that XFA. And if you ever have
Job,
any
Andrew.
questions for coaches, send them over to Coach Paul. uh, but welcome everyone to At the Buzzer, our market recap. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this call is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our job as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. Uh, we had some news come out today, Coach.
Yeah, what news was that?
We had, where is it? We'll scroll up. NFP, non-farm payrolls, U.S. unemployment rate as well. Non-farm payrolls came in at 12,000, and forecast was 100,000. Um, I don't know that I've seen a number that far off for non-farm payrolls. Have you, Coach?
No. Um, I want to see the revision.
Right, right.
Um, a shocking number. Um, but I guess, with the hurricane, z
Yeah,
plural, I think that had something to do with it. I don't know. But I've heard. So yeah, kind of a shocking number. Um, what was interesting is in the interest rate world, they shot up or yield shot down on that number. And as we speak, we're making new lows or new highs in yields. So Um, the number really didn't change the flow of the market. It did for a short term. Um, so you know, been around for a while. These big numbers, I always, there's always the revision. So they're allowed to reset. Um, in trading, we're not. So we'll see. But that number is becoming a very important number for market sentiment and volatility. Um, I'd have to say it's one of the top three. How about you?
Would agree with you. And just speaking of the interest rate world, I'm looking at FedWatch right now, and showing a 97.8% probability of a 25 basis point rate cut for the next Fed meeting, which is next week, November 7th. Next week is going to be an interesting week. We have an election. We have another FOMC meeting. What else do we have out there?
Great decision.
Yeah, a rate decision. We have earnings. Next week is going to be a very interesting week. I don't want to say, a bad week to trade or anything like that. We have to take whatever the market presents to us and execute. And regardless of what you do, if you have your risk managed, you can trade any market conditions. But it's going to be interesting for sure. I think we're probably going to see a lot of big moves in a couple of different markets, not just the equities. And I'm excited for it. We talked about what we might do as far as scaling down if the volatility really picks up that much in the equities. Um, but it's what we look for as traders: opportunity, volatility, and I'm hoping that's exactly what we get for next week.
Yeah, you hit a key point there. Volatility, if volatility is high or is moving up, your your risk moves up and your position sizing should adjust to it. Um, you just mentioned all those factors, and in the hierarchy of decision making is keeping the account. That begins with proper position sizing, um, and not taking too inordinate amount of a hit. So keep that in mind for next week and strap on the seatbelts. It's going to be a wild ride.
Yes, it is. Yes, it is. Let's get into these markets. We like to focus on a couple of different markets at the buzzer. There are about 35 different markets that we can trade with Top Step accounts, not just the equities, even though the equities did present some really good opportunities today. But let's look at the biggest percentage movers. To the downside, we had the Mexican peso down 1.31%, Ultra Bonds down 1.72%, and Nat Gas, our biggest percentage mover to the downside, down 2.22%. That Nat Gas is always on that list.
It's the beast.
Always on
Um,
that list.
the great market.
It
And
is.
part of it is exacerbated because the price is so cheap,
Sense.
but it's a beast. So
To the upside, we have the Nasdaq up 0.7%. We saw almost a 3% move down at one point in the Nasdaq yesterday. Looks like we retrace some of that move. Corn up 0.97%, and soybean oil, which has been low key on this list all week as well. Soybean oil up 2.86%, our biggest percentage mover to the upside. I think out of 5 trading days this week, soybean oil has been in the biggest percentage movers 3 times. Um, just kind of, if you look at the chart, I'll pull it up real quick before we get into everything else, but this is the week in soybean oil, and it's just been going up.
wow.
Yeah, just been
And
going up.
that's going to put a dent in your in the costs of a lot of food. Soybean oil is used in just about everything at the grocery store. Wow. How did I miss that, coach?
There's so much to focus on sometimes that some markets slip by us. Maybe we should have threw this on a scouting report at one point. got back above that 200 moving average. We'll just do a quick tech analysis of this before we get into the what we always talk about, but choppy range. We don't care about prices right now. From a technical perspective, this got above the 200 moving average yesterday. Had that same gap down that we had early in the week with everything else. Chopped around the 200 moving average, and once we got above it and we got some separation between the 20 and the 50, 2 days of biggest percentage movers, about a 7% move in 2 days, uh, 3 days.
Oh, wow. Wow.
Let's round out our big four. The S&P's up 0.39%, crude oil up 0.3%, and gold down 0.2% to round out our big four. Let's start with the equities. I'm going to go to the ES. Uh, we have the ES here on a 30-minute chart. And actually, let's go to a daily first because we did have yesterday, coach, that closed below the 50 moving average on the daily. First time we've closed below it since September 10th. And today we pretty much closed right at it. 57.60 was the around 57.60 will be settlement for the day. That 50-day moving average was right around 57.57, so closing back above it. But today was kind of what we see on some of these huge down days, a bit of a retracement. But if I'm looking at this, we closed in the lower end of this range, right? So we tried to trade above 50% of it, couldn't close above it. Closing near these lows, this tells me that sellers are still present in these markets, obviously. Uh, at a 30-minute chart here on the S&Ps, let's mark out yesterday's range just one more time. Where were we? Here, down to there. And we'll look at the first 30 minutes of the session, which is this white rectangle inside the green one.
Well, we traded sideways last night. What happened in London? London
Same thing
set
that
the
always happens
tone.
in London.
Um, and big rally from there. The news candle. And this is interesting, Coach. I was noticing on my CQG chart. If we go into the open, the 8:30 U.S. Open, and look at the volume.
Shorter time frame.
First, yeah, the first three half an hours. It's usually the first half an hour is the largest, and the next are like half of it. Couple of things I noticed. It's the beginning of the month. Allocation comes. Price was on sale. Um, so larger institutions are going to every month buy what? Stocks. That's what they do. But I found it interesting. The first three, look at the volume number itself. Was they were about even? They're within a percentage.
Yep. Looking at it on a 30-minute, 141,000 for the first 30 minutes, 138,000, and 138,000 for the. Yeah, that's interesting.
It's that sounds very much like an algorithm from an institution that like we have to buy. Let's buy the first hour. Um, it was very because when that stopped, and so we set the initial balance the first hour. That range after the first hour, like almost to the tick, was the high of the day. And once that buying stopped, as 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 defined by the volume down in there, that was it. Drifted lower. The rest of it, even though we're 25, 23 higher after being 100 lower yesterday, it's I would define that as a dead cat bounce. Um, no, um, I found that it was almost the exact amount. I could just see some institution, we have to buy X number, do it in the first hour and a half.
You know what's
But
interesting about this too, Coach. We never saw right, yesterday's sell-off, we never saw much of a counter trend move at all, right? So the way that I always look at this is just like, okay, at some point whoever sold from up here, right, going back to Wednesday, whoever sold, they're going to need to take profits. And where in this price action would they have taken profits? Because it means, if you're short, you're buying maybe this move a little bit here in London, but that's not nearly enough volume for the volume that traded during the daytime sessions to say, yes, they might have taken profits and are out of those shorts. But something like this, right off the New York session open, new allocation coming in beginning of the month as well. Makes a lot of sense, right? You took your profits early, and now we're done for the day. Who's going to hold a position or building into a position going into the next week that we have?
Yeah, it's a good point. You know who that would be? People have to buy it every month. Right?
Right. You don't have a choice.
The time frame is a month doesn't matter. We have to allocate. Um,
Yep.
so very interesting. I would say a very weak close. Um, that there was no follow through. It was from a Fibonacci standpoint, we retraced about 63% of yesterday's range where was rejected immediately. Um, so pretty weak close. Going into next week, I, I, we could see a decent break. Um, but that's just my opinion. And when I asked my brokerage firm if I could put my opinion in for margin, they reject me
Every time.
um, every time. So, but we close on a daily. Will we get a 3 bar reversal here?
On the daily, did we get this? Do you kind of count this as a 3 bar reversal right here?
No, I don't. We'll have to
Oh,
ask
you saying
Coach
will we?
Dakota.
Will we? Yeah,
Yeah.
yeah. I never look at the markets that way. uh, I'm always late. Someone is always pointing out to me. It's like, hey Jay, isn't that a 3 bar reversal on such and such chart? AB the Don, you have a great weekend as well. Definitely time to enjoy the fam. We are gonna get out of here soon, but let's look at the Nasdaq real quick. Pretty much the same story. On the daily chart, we retraced about 50% of yesterday's range and then sold off from there. If we look at, I actually did take a Nasdaq short today on a 3 minute chart. If we look at yesterday's 3 minute opening range, which was the candle that it was a 100 point opening range on the 3 minute. Um, this was the short I took, where we tested into it, rejected. Wasn't looking for a short here, but then on that second test, taking this short just off of the rejection of that 3 minute opening range. It was such a large range um, that was not surprised that price rejected. But all of the equities, coach, if we want to talk about urgency, and I know a lot of our traders trade the New York session open, a lot of urgency in all of these markets, right? We saw it in the 30 minute. Here's a 3 minute opening range. VWAP leaving really early. I'll go to the Dow. The Dow was probably an even more dramatic version of it. Uh, got going right away. And again, all of these equity markets having big down days yesterday, just put that in your playbook. Maybe it doesn't happen all the time. Maybe there are days where we get continuation of it. But we came down to some major levels, 50-day moving averages on a lot of these markets. Seeing this buying, and you put the whole puzzle together beginning of the month, it sets up for a really nice morning. And this was a two-sided trade. You could have made money on both sides of these markets today. Trade location was definitely important. VWAP gave you a really nice opportunity for trade location here um, on both sides, really. But really nice trade. Anything else on the equities, coach?
Um, no, but that led right into a question by MT.
Okay.
Coach Jay, can you please explain the trade entries when VWAP and anchored VWAP and price both out the range in 3 minute versus 30 minutes. I think we just did that. Um, this is the class. This is on a 3 minute. If you use the 30 minutes, the same philosophy is the volume defined by anchored VWAP. Is it at the top of the range? Is it leaving early? In this case, it left immediately on the 3 minute. Anything to add to that, coach?
No, where your entries would be ideally are going to be as close to this VWAP as possible, right? And we've talked about this. We get to see the markets like this at the end of the day, so we could easily say, yeah, this should be my entry. But when you see this happen enough times, either you scale down trade micros and just get in because you know the market is pushing to the upside. But if you're trading minis, your trade location is going to be very important. Um, I think if you can trade micros, you can start scaling into a position as you see this happening. But if you're trading minis and you're tight with that risk reward, I think in order for it to work, your entries need to be somewhere near volume. So waiting for a pullback to volume, likely the best trade location. We get to see the markets like this while they're printing. And sometimes you get that feeling like, oh, shit, it left without me. Here's a decent opportunity on a pullback here at 42, 180. It didn't hit VWAP exactly, but it got pretty close to it. The last thing I want to do is buy up here at these highs, especially if I'm trading minis. If I'm trading micros, I might take one and say I'm scaling into a position, and if we get that pullback to VWAP, then I'm adding more onto it. Um, but yeah, you want to be once you get this confirmation that it's this urgent, you want to be as close to VWAP as possible with your entries.
Great example. Thank
Well,
you,
coach,
coach.
no problem.
Yeah.
What's really good? It's always good. Andrew just confirmed the audio was good, the video was good, and the like button works also. He just clicked it a few times. Didn't give him a virus or anything like that. Didn't close out the stream. So if anyone was waiting to click the like button for confirmation, it's all set to go. You can go ahead and click that. Thank you, as always. I'm gonna keep finding new ways
Slip that in.
to slip that in. Andrew, thank you. Andrew threw the alley oop on that one, so I got to take it. We appreciate it. Hit that like button if you have not already, and it's the thumbs up on YouTube. But we appreciate you all for joining. Uh, Be the Don says I left
Right.
screens of an example of how I played the 3 minute opening range in your Discord. Someone asked what it was. Thought I'd give a visual. Yeah, that's awesome. I love when that happens. Honestly, I we talk about concepts here. Coach Paul talks about 200 moving averages, and when I see a really good 200 moving average play or 20-day moving average or 50, I usually take a screenshot and send it to Coach Paul. So um, I think I've said it on slow markets when I took over for Dakota one time. I selfishly want as many people as possible to see the markets the same way I do. So then when you guys see it, you can just say, "Hey, coach, here's that urgency trade," and then all I have to do is click the buttons. I'm of course going to verify it myself, but the more eyes, the better. Um, the more eyes, the better.
Yeah.
But thank you for sharing that. Go ahead, coach.
And also, if we get enough people to do it, we're gonna have a better shot at making it work.
That's true. That's true. It's like, all right, guys, we're all buying right right here. It's safe. Of course, anything we talk about here is for educational purposes only, not any investment or trading advice. Um, Anything that you hear, whether it be us, Topstep TV, if you watch any other streams, verify the information yourself. Verify that you can execute what you're hearing, and get comfortable with it because ultimately that is what matters. But thank you for sharing that. Um, right. Anything else on the equities?
I'm good. Let's move.
Let's move. All right, let's look at gold. Gold had an interesting day. We know we made the new high in gold yesterday, 28,018. And we sold off, and we've talked about this a little bit, coach. Maybe some pullback towards this 20 moving average on the daily, which is at 27.15. We've seen gold do it before where it makes a new all-time high, sell off, hit that 20-day moving average, and continue the rally. We had an engulfing day yesterday. That yesterday's range engulfed the prior 2 days. We got somewhat of a bounce. Looks just like the equity markets. We got somewhat of a bounce, rejected right at 50% of that range. and 2770 half was 50% of that range. We rejected there and continued this pullback move. I'm going to go to a 30-minute chart. We'll look at last night's open. Looks almost exactly the same as it started a little bit. See, we got some of the rally into the close in gold yesterday. There is our
Boy, that looks like an equity.
it looks exactly yeah, it looks
I,
exactly
I
like
I
an
was
equity. It's
just
kind
gonna
of
say,
weird.
I thought you brought up gold.
Why is this not going up?
Yeah, why is it not going up? Boy, that looks just like the stock market, almost to the T.
So 50% was right around there. We traded up to it. We can see all the wicks here. A lot of indecision in this imbalance range. We had a strong sell side imbalance. A lot of selling coming into the market here. We filled half of it and rejected, right? So sellers still up above this, giving you a nice opportunity to take a short during the New York session. Um, Let me see. We didn't do this in the equities, but I want to see if NFP had any effect on gold, and it did. So something we haven't talked about in a little bit, but framing out the news candle. Here's the NFP candle in
Wow,
gold, high volume.
big volume.
Yep, and VWAP never left that range. Oops.
Hey, hey, keep that there.
VWAP never left the range, right? So, maybe if we see the market this way, we've been a lot more cautious about preempting some of these trades uh, because if the volume doesn't go, there's no confirmation, right? It's kind of a hollow move, right? So it looks like it's going to leave the high of the range. If we put all of the context in the picture, we have 50% of yesterday's sell-off right above where we are, um, and there are no buyers, right? VWAP stayed here. What that says is, VWAP in the range is pretty much a flat line. Fade the extremes when possible. Now, maybe you're not fading the extreme this early because this is 12 minutes after the number, and you want to get a little bit more market information. But it gave you a couple of opportunities for the same trade, right? Where it looks like it's pushing up, and we're holding 50% of the news, so maybe you're buying it here. Um, but really, no confirmation of a any kind of breakthrough volume. And then we just kind of gave up. I don't. It wasn't even really like a sell off. It was just like, oh, okay.
And a couple things using this. Say you just you want to buy,
Mhm.
okay? You had the big candle, big volume. Framing out my risk. Now, knowing that VWAP isn't following, but I want to be ahead. I want to be where the buying is. You have 150%. You know, I can buy it on a correction of 50%. But look at every 50% correction, the VWAP did not move. So it's kind of like, if you're playing poker and you're watching the cards and the cards that you need are someone else is getting, it's like, or you're not getting them. As time goes on, it's time to re-ante. I think I'll pass because you're not getting the follow through volume. That's another way to look at this setup. Now, just if we just take that on a price basis, it's like, here we go. At least from my experience and the disappointment. It's like,
Yeah.
well,
And
when do I get out?
I
And
thought you
then,
guys
okay,
liked it.
I don't want to take too small of a loss because then I still have hope it's going to continue. But getting market information at one point, if you were buying this, there's a 90% chance you lost money. That's it's all right. But as you go through it and release bad habits, whether it's gold or NASDAQ, is by using volume, you can understand as time goes on. I'm buying it and it's not working, but guess what? with VWAP, the market has buyers and it's not working for them either. Okay, and now I just stop. Just stop. Um, it's not
I,
working.
I like what you just said there, coach. The market is buying it and it's not working for them either. Some of the difference, and we just talked about it in the equities as well, right? Some of the buyers that we see in the equity markets, they don't have a choice, right? They have to buy it. The great thing about being a day trader and trading your own money or trading a Top Step account, an XFA, you have a choice. Um, and you can say, hey, if this isn't working, I can cut it. I don't have to ask for a sign off from anybody. I don't have to worry about, someone using this money for their retirement or anything like that. The only person that's using it is me. So if it's not working for me, I'm good, guys. I'm out. There are other market participants who do not have a choice but to be in the markets, um, which is an advantage that we have that I don't think we talk about enough. You don't have to trade if it's not working for you.
Oh, coach, and here's another thing. For those of you who are traditional chartists, that top is a classic head and shoulders.
See
Big
if I can do
buying,
this.
back in.
Oh,
That's the M for,
there you
well, I won't
go.
say that 2 words. Kind of big middle finger to the buyers. So yeah, we can just, you had it right. Frame that out because it's classic. It's an M. You could leave it with the yeah, just the framing out of the half out there. Wow. Yeah. Now with VWAP from that opening or from that news candle, let's see what VWAP does inside of that.
It's flat.
It's flat. So on the right shoulder, when we broke the neckline, there. So one of the things we Coach Jay and I talked about is showing different charting patterns and different things. We're going to do more of that. And for the ones we know, um, but if you have certain things you want to look at, we can go over that. We want to give an overall perspective of charting. We have our preferred, but there, right there, that's
I'm looking at here too, because sometimes we don't know on the breakout, and maybe this is just me being Mr. Patient Man, but on this break, you could try to preempt this break, right? You could try to preempt this break, but look at this one where it says, "Oh, it broke. I'm going to get in short." An immediate rejection of it. This is the actual break. What I'm looking at is the retest of this break, presenting a really nice opportunity to take that trade.
uh,
I
and
don't
all of
know
that is under VWAP
all of it
after
under
being
VWAP.
all of it. So yeah, hmm, I like that.
Um, I wonder, and again, I know there are traders, and you said chartists who will say this is a head and shoulders, and then there's a definitive way to enter on a head and shoulders. I don't trade that way, so if anyone does, let me know. Like what you would look at, and who just said it? There's 2 fake outs there, right? So yeah, there's one here, a little bit of a bounce, one here and a bounce. Um, depending on where your stop is, maybe these aren't the most dramatic fake outs. This is, let's say you got in short here, 27.59. There was a 4-point move against you, which isn't the biggest fake out, right? Uh, sometimes we see these fake outs where they go and then bounce completely the other way. Momentum was heavy here. So eventually we did get it, but you just had to wait and hopefully be okay with a, 2 to 6 point drawdown in the trade before it eventually went your direction.
Oh yeah, that's why the measurement of risk.
Yep.
Okay, I like that the fact that it broke the neckline under VWAP with the highest volume. We got under.
Yeah.
There's 2 ways to look. We got under the low price of the high volume candle, but we didn't close. Either way, it's all under VWAP. So you can also start going that, but all that buying has failed. So if I bought it in that candle, one thing I know is if I had a stop, I don't have to wait for the stop to get hit. I'm done. Take a good loss, and that's a good loss. Um, Second, when we closed above it, we still went back and tested the neckline. So one of the things that we try to find the perfect trade, so we don't have to take any heat. There is none.
Every
So
winning
at
trade
this
I every winning trade I took today, there was drawdown. Every single one. Good coach.
Hypercube, I actually really like this play, and I'm not criticizing, but it could have been a nail biter if you took the trade as it is. It's a bit wicky. Yeah, absolutely. Yeah. So, like I said, you have to take some heat. So I would go back here. That first time we broke that neckline, and from my risk management purview, I like the short. How much do I like it? Well, depends how much I'm willing to lose. Looking at the average true range,
ATRs would have been 5.6 points.
which would have still kept me under VWAP. Now that's
Mm.
$500. I could go, all right, I'll take that. But I actually want a little more than that because I want it to close above VWAP. So position sizing, I go, okay, I don't do the 500. I go half and do five micros. Now my position sizing is going to be a little more comfortable, but it doesn't mean I have to risk that whole thing, but that's what I'm willing to pay. So one of the things to get into a consistent risk basis is to understand that is like, okay, I like this trade a lot. I do. I like this is a good. What you might do this. I'll sell three. I've done that, and
You
then
have a
it
full
just
allocation until it does what you want it to.
another thing is I'm an old school guy. If you're worried about wicks, put on a bar chart.
See,
Uh,
there you go. There are no wicks.
yeah, and I'm not being a smith. So there are actually wicks, but it doesn't come up as um, strong.
Yeah.
But also, here's the bottom line: is that we're measuring volume, and in this we have what head and shoulders. Even if you didn't have the trade on, you look at if you see that, wow, that was big volume, big wick. I mean, excuse me, big candle, or all right, VWAP didn't move. Oh wow, I don't know what leave like out of it. There's failed buying.
Yep.
If you bring this down to a 5 minute chart, whatever it is, that's a good opportunity.
That's the thing too, right? Depending on the time frame chart that you're on, it might not look as scary right now. I'm looking at a 3 minute chart here, and we're seeing a lot of wicks. Let's go to a 15. Does it look? Let me go back to candles because this looks crazy to me. Uh, uh, yeah. I mean, if we look at a higher time frame, you see a wick, but these candles do look heavy. Uh, we open up near the close of this candle. Yeah, this is a really nice trade. I don't look at Head and Shoulders often, but maybe I will
Well,
start.
how did we get here? We were looking at the high volume candle,
Right.
right?
Volume moves the market. Volume moves the market.
It has to.
Think
If there's no
think that's gonna be the
volume,
name of
there's
my
no
book when I eventually write it.
cool. Can I write the intro?
Absolutely, absolutely. Uh, they're the
How
top step levels. Oh wow, Courtney! Shout out to Courtney saying, "Can you turn the top step levels on for gold?" Here's a great endorsement for using the top step levels. Uh, it looked like it checked every single one of them to the tick, pretty much. So the yellow one here is yesterday's value area high. The orange one was yesterday's high, which we know it was at all-time high. Last week's high, 27.72. This red line here. Um, Came back, checked the yellow one again, bounced off the blue one, which was settlement, then came back and checked Hoag's weekly kickoff high to the tick. Wow. And then all the way back down to the dark blue line, which was yesterday's value area low. That's pretty cool. I think that might be the best example of top step daily levels. And again, these are levels that some of them are market generated information. Yesterday's value areas, if you're using volume profile, market profile, you're going to get those levels. But really good just visual cues to have on your charts. And then we have the additional top step daily levels webpage. If you don't have that, I'm going to put it in the chat. All of us as coaches, myself, Coach Ray, Coach Vince, Coach Paul, Coach Jack, and of course, Hogue, all putting levels in every day. And these are manually done. So we're literally looking at the charts for four markets every day and picking what we think for that session has an opportunity to, come like for the market to trade to. Not suggestions to take any type of trades or anything like that, just areas that we think the market can potentially trade to. And coach, I got to say, we are pretty damn good at it.
Um, Boy, that was quite that level right there. Now, but even at levels, if you're looking at levels, it's like I don't just trade a level.
Same, me either.
There's structure around it, but here this is like we stumbled upon this, and so looking at that head and shoulders, I don't. It doesn't happen like that often. That's why it can be very frustrating. It. Um, but when it does, it's usually quite special. But classic example with using volume to help enhance your market analysis.
Anything else on gold? Let's zoom out. We did close below 2750. Looks like, gold doing gold things, selling off a little bit after making an all-time high. We did get about a 60-point pullback. Um, I don't think this is a change in the trend of gold yet. I could be wrong, but I think I would need to see a lot more selling to say, okay, we're done just going straight up. Because I'm sure somebody else said that earlier in the year. Somebody probably said that in March. They were wrong. Probably said it again in April. They were wrong. Then they said
Thoughts
it
I
in August.
told you.
They said it in August, and they were wrong. So I don't want to be wrong. I don't want to call this the top. I'll know it's the top when I feel it, when I see it turn around.
When the top is, you'll know it after it happens.
After it happens.
I mean, anyway, it still has, it's kind of dramatic, but great, great play in the goal today. What's next? Crude oil?
Let's look at crude finally filling that gap that we had down. I'm going to go to a 30-minute chart so this looks a little bit cleaner. But we got back above the 200 moving average on the 30-minute yesterday. We had this big gap down to open up the week. And we've been talking about what happens when we start to accept price back into this range. Let me take the moving averages off for a second. We're above the 200. So yesterday we started to accept price back inside this range. We got this spike on the news out of the Middle
Close.
East. Go ahead, coach.
Yeah, that was on the close.
On the close, yep. On the close, we got that spike, and then that spike took us to 50%. And to me, kind of took some of the air out of the move that I would have been looking to trade in Crude, because it did most of it in a 30-minute candle. I would have loved like a just a nice trend day through this to take advantage of it, but it did give an opportunity on the downside. We have the first 30-minute range marked out here with this white rectangle. VWAP anchored to that. London does it again. I think we should just start anchoring the VWAP to London.
But London's calling.
Yeah, I think we should just start the day with London every day. Where the Asian session, we do get some really good moves, but this has been consistent now and across a couple of different markets where we're seeing the urgency happen in London. Um, and if you look at the difference there, right? If I refer to the Globex VWAP here, I may or may not take this trade. I might
Yeah.
slip from the charts.
Um, but looking at it's interesting looking at that close on that huge volume, and that was
Right
on the
here.
close.
Yeah.
So most likely that's either it's a large entity either covered some shorts or got long because it's what that trade is going to go on the statement as November 1st if they made it. And whatever it is, that was a huge candle. What I found is we didn't reject that candle all night. London had the follow through right above it, but coming into New York, oh, what is that? That's a double top. That, but looking at it, we came almost to the tick right back down to the bottom of that huge candle, and we just did it not too long ago. Oh, maybe 2 minutes ago.
Well, yeah, I
Um,
think we're still selling. Well, markets are closed now, but up until a couple minutes ago, we were still selling.
Now let's look at those levels. Can you bring the levels on to it? Yeah.
Yep. We had this orange level up here, yesterday's high, which we can see on this spike. We traded above it. Let's see, yesterday's high. And
Oh,
again,
just right there.
these markets are, we're day trading, but there are market participants who are in here all the time. So sometimes just using the volume from the prior day, coach, you just talked about the range of it. If we attach VWAP to that as well, we looked above the high, price went, volume didn't, gave us an opportunity for, a short back to it as well.
And look at when it closed under the value, the anchored VWAP from there.
Yep.
That was it. It was
Mhm.
over. And where did we go? Right back down to the bottom of that. Interesting. Actually, you could have made money both ways.
Anyone trade Crude today? I think Deanna traded Crude today, but anyone in the chat trade Crude? If you did, let us know how you did. And what side did you buy it? Did you sell it? And how your trade ended up? Because there was definitely opportunity on both sides. A little bit more to the downside today, but opportunity for sure. What's that
What's with
red
the red?
line? This this red line is anchored VWAP. So I just anchored it to yesterday's high volume on that close. But we can move this around and kind of put it anywhere.
How did you do that?
How did I do that?
Yeah, how do you use that anchored VWAP?
No one in the chat asked. I'm not taking that question. They know the chat knows by now, and they can tell you how to do it, coach. Chat knows by now. But if you don't know, the anchored VWAP is on the left side in the drawing tools, 5 down. You have forecasting and measurement tools. Halfway down that menu, you have anchored VWAP, and put a star next to it because you're going to use it every day. And it's going to be up here in this drawing panel. And you just click on these 2 lines, 2 candles with a line, and click on a candle.
Oh,
And did it.
thank you.
Oh, no problem. If you have any other questions about it, let me know.
Um, no, it's asked a lot. I tease Coach Jay about that. But we said it's a great question because we get a lot of questions on it. It happens all the time. It means to me the data is it's pretty valuable. And thanks for doing that.
Oh, no
Um,
problem. We actually had a question from MT about Anchor VWAP before. Can you please explain the trade entry? Oh no, we answered that one. My bad. Um, Here's a question, Anurav. How do you decide on your profit target and stop loss? I'm struggling with that. Want to take that one, Coach?
well, for me, this is day trading, framing out your risk. So let's let's go down to a 5-minute chart. Now, let's say I wanted to sell this, whatever it is, because that anchored VWAP right there. Keep it there. Frame that out. Jesus, that's urgency. Now, framing out my risk, I use the average true range. So, two ways we could do using average true range. My biggest risk will be two average true ranges. So,
You say two average true ranges. What is it on the time frame that I measure it? Is it on a 30-minute chart, an hourly chart?
but it's on the time frame that I'm executing it. So
So on
this
the
is a
5 minute.
5 minute. Yes.
Got you.
So whatever the average true range is there, I times it by two and I put my stop. All
So I'm
right. So what
seeing on a 5 minute here, we got the ATR at 18 ticks. So if I was to get in short here, my stop would be 36 ticks. If we got on
uh,
short at VWAP here, 36 ticks,
he knew highs, basically.
basically.
So 306, this is crude, all right? $360. If I can't don't want to take that, I could do a mini. Whatever it is, know that now I know that's I'm putting my stop there. I'm willing to do it. Now, with a day trade, because I don't, if we pull that chart all the way to to the start, bring it all, because I don't know this, right? I'm hoping, but here, $360 is my biggest risk, or I'm willing to use that stop. Now, on a day trade, 2 to 1 is, I think, realistic. I have to learn this myself because I'm more of a swing trader, and because I can it's swinging, I have a lot more time. Day trading, you don't, right? So you got to understand that when people say see money, take money. I think that 2 to 1, if you can get it done, thank you. So we were at 360. Keep the stop in. If I'm up 720, I'm done.
The one trade, 72 picks right down there. Your exit entry would have been about here. Exit would have been somewhere up here. And your profit target would have been somewhere down there for a really nice trade.
So, and one I think is, yeah, you eventually went more like 4 to 1, 5 to 1. Not your job as a day trader.
So great point, coach. One of the things that we don't talk about often, and traders say, uh, well, I got out, but it went another 50 ticks without me. Look at what happens on that initial price target. Look at the price action afterwards. Now, does it continue to drop? Yes. But is it worth and this is a decision that every trader has to make on their own, right? You had a trade that was, positive 720 bucks, 20 bucks with a one lot. Is it worth the pullback of more than half of the trade before it eventually continues in your direction? to stay in that trade with a full position. Now, maybe you scale out and you're trading multiple contracts. Maybe you're trading 5 micros and you take 4 off at your initial profit target and leave one for a runner and trail it down. Um, but this is, forget about price. This is an hour and a half of sitting in that trade before it eventually continues to the downside. Now, for a day trade, again, do you have the patience to sit in that? I don't. I don't. Maybe for 10% of the position, but with a full position and it hit my ultimate price target, I'm gonna take a lot of the position off.
Yeah, and it's something I'm glad you brought that because it comes back to your time frame. It's the day. If you can get any, I mean, if you had a job and they were paying you $750 a day, and that's not what this is about, but mm, you get professionally paid, right?
Pretty good salary. Yeah, and like you
Two to
said, it doesn't work
one.
like that here, but yeah,
Yeah, 2 to 1 is a good payout. I think this is a very reasonable, and your consistency, because you know what happens? There's nothing to stop that to going all the way back to unchanged, and that creates bad habits. It's like here, ding, I get paid. So I don't think it's I'm finding out day trading is not your job to grab the whole range. Buy low, sell high, buy low. Doesn't work. Having a reasonable expectation and a high probability target, higher probability target is a much better framework. And you see, I don't know, a good trader, the coach Dakota. Does he does he sell the high of the day or buy the low of the day?
usually, yeah. I mean, sometimes he gets lucky, but no, he doesn't try to.
Yeah. So
Doesn't try to. Coach, one thing you said about that 2 to 1, because sometimes you hear traders saying, "Oh, I trade with a 2 to 1 risk reward ratio," but they are, it's just like, "Oh, well, I'm not making more. I need to have a 3 to 1 or a 4 to 1." The reason I think some people are looking for higher risk rewards is because the stops are so tight, right? Where this is a short that we're taking, and what I've learned, and we might go over time here because there's another question I want to get to, but I also want to get this point out. What I've learned from working with Coach Paul is that 2 ATR stop, if you have good trade location, that 2 ATR stop is often so far out of the way that if the market starts trading up towards it, you'll have time to say, you know what, I don't like this anymore if you get new information, which means it's a pretty wide stop. Think the reason people aren't comfortable with it is because it means a high dollar amount, but there's a way to adjust that and still allow the market structure to do what it needs to, and that's by trading smaller, right? So if the risk sounds like too much using 2 ATRs, it's not about the 2 ATRs. It's about the contract size that you're trading in relation to the account. And I've had to learn that myself. Now, a 4 ATR move is a great, right? Because we're risking two to make four ATRs with such a wide stop is an amazing. You're catching almost the entire trend for the day most times, right? Where it's not, oh, I'm risking 5 points on the Nasdaq and I got a 4 to 1 trade making 20 points, which is still a great trade. But with a 4 ATR target, you're capturing a huge part of the trend for the day, and that's a 2 to 1 I'm okay taking. Uh, so just wanted to bring that up. That 2 to 1
great.
ratio is anchored on whatever that risk is. Um, so
Yeah, because here, if you have to take the proper size risk, and like
right,
it was, we haven't talked. If you're getting stopped out a lot, they're not hunting your stop. I had to go through that. Oh, they know where I'm at. Well, here, natural variation or vibration. Markets are, don't work on a flat line. So up and down. If you're like, I want to only want to risk 10 ticks in the Nasdaq, 10 points, not even ticks. So this is a game, but 10 points. Well, this you're gonna get stopped out a lot unless you're pin perfect on your entry. And that when you do that, your probabilities go down a lot. So think in probabilities. Is it a highly probable that it's going to move 10 ticks against me?
We got a question from, I don't know if it's either Jill or Gil. Correct me if I'm wrong, but I'm gonna say both. If I had 5 on and I took 4 off, my average is ruined. It moves my entry way down, nearly better off to close and re-enter. I don't think about it that way, and if you had all 5 on at the same spot, your average won't change. Your average entry won't change, it's gonna stay the same. But if I'm scaling in and out of a position, I think about it the entire as an entire trade. There was actually a trade that we had on yesterday during fast markets, a short in the Nasdaq, and Hogue trying to scale out of the position. We were short 3. He was trying to take 2 off, but he accidentally closed out the full position. I said, just put it back on. Just put it back on. We're pretty much at the same price, and the overall thesis for the trade is still valid. Now, if we would have put that one lot back on, it was another $2,000 available for it. So you have to think about the entire trade as its own. Now, if we would have got back in at that worst price, would it have been kind of you know, I don't jarring to see, well, now that I'm in at this position, I'm in a drawdown. Yes, for that one lot, but I would be looking at it as the entire trade. Now, for the whole trade, I'm still up. So, yeah, it doesn't. If you're in all at one price, it doesn't ruin your average. And then, uh, yeah, sometimes I just if I do something, if I if I'm in a 5 lot and I want to take 4 off, but I take all 5 off by accident, there's a lot of times where I'm just putting that one back on. Um, because it's the same trade.
The runner.
Exactly. Let them run. If you think there's room for it to run. Now, if you got out and it looked like the bottom, then I'm probably not taking it. But if I had in the Nasdaq, if I say, oh, there's another 60 points available in this move, there's a lot of times I'll just put it back on and then I'll do that math in my head and say, I'm not going to let this runner wipe out the full position. But normally on a runner, I'm okay with it going back to break even because I've taken much of the profit already from the trade. It's a mental game. You have to figure out how to play Linus Rain 100%. Um, and it's Jill, like Jack and Jill. Got you. Great question though, Joe. And we got one more. I know we're above time. Jayhawk. I took a trade on ES, getting rejected from an IB range high with the classic M shape entry setup. Let's look at the ES. I know exactly what you're talking about. This here. But NQ was the weaker one. Should one sell the weaker one or the one giving the setup? Always default to the market that's giving you a setup. What would you say to that, coach?
You know, always trade. The setup comes in that market. Um, and we've seen many times where the Dow moves one way and the Nasdaq moves the other, or vice versa. Um, Trade the setup of the market that you found it. Period.
Says it all the time. Yeah, they do sometimes follow each other, but we'll see sometimes where the S&Ps are rallying and the Nasdaq can't get out of a 30-point range. So, uh, do they play catch up? And if you want to play that, but that's a completely different game. Um, if you see a setup, take it on the one that you see it in. But we are at time. I think we got to most of the questions that I see in the chat. It is Friday also. Coach, you got any words before we go? I want to check my notes just to make sure I'm not missing anything.
Okay. Well, thanks for tuning in, first of all. I hope you got something valuable out of this. Next is this weekend, get some rest. Um, I'd say the mother of all weeks is upon us. In trading, just as important as your strategy is your mindset and your state of mind. Getting plenty of rest is extremely important. So enjoy the weekend, get rest, and let's get ready to rumble next week.
Let's do it. Only note that I have here, we have programming all the time on TopStep. Coach Hoop, I'm pretty sure, does a Friday class in 10 minutes in Discord. So make sure you join that. But we have other coaches doing classes in Discord all the time as well. Next week, we're starting off on Topstep TV with Nick Fortick with the market kickoff. Then we'll have slow markets with Dakota, 7:30 Central, and the London Open with Deanna. I will be drinking coffee at 3:30 in the morning, 4:30 in the morning Eastern time. I'll be on the London Open with Deanna this coming Monday, which should be a lot of fun. And maybe we can capture some of these London trades that we keep talking about in hindsight. I'm gonna try to take one. Um, but outside of that, I don't have anything else. Trade well next week. Do something fun this weekend. Get off the charts. If you have to do a review, go ahead and do it. But um, make sure you take some time to yourself. Uh, we work really hard at this, and you want to make sure you're in the right mental space to perform well. And I think I get there by being off the charts. So thanks as always. Thank you for joining this week, Coach. Great stuff as always.
You too,
Have a great
coach.
weekend, and we will talk to you all next week.
Bye.
Bye.